Here's a setup in Philip Morris that I like. That's ticker symbol PM. Now, before we get into some analytics, I want to first just zoom out. This is a 5-minute, 5-day chart. And let's take a look at what it seems like price action has been doing. Feels like we've been trending up, chopping, trending up, chopping, trending up, chopping, trending up. And now it feels like we're in the chop zone. So I'm continuing to play this trend to the upside. And so far, the trend has yet to be broken. I'm not going to question it. Second thing, on the daily time frame chart, we made the all-time high today, and that happened in after-hours activity. So that tells me that there is strength somewhere here. Now, it could be that we made the all-time high and we completely reject it, but for right now, I'm operating under the premise that this trend is still very much intact. Now we come into the question of, well, do we like this setup? Where do we want to enter this setup? What's the entry? What's the stop? What's the target? That's where, if we come into our opening range breakout scanner, this becomes really useful. Now, as I make this video, it's currently 9:25 a.m. Pacific. You can see that right here. In fact, it's a little bit after that now, 9:27. And we can see that Philip Morris is up at the top of the scanner when we filter for the pullback trades. Now, the pullback trades is a subset of the strategy of opening range breakouts. It's where we've had the morning breakout, and now we're looking for a pullback to the half range level where we can now skew our risk to reward, where we're risking one to try and make at least one, if not two. So that's the whole idea with this pullback setup. Now, inside of Philip Morris, as of right now, we had the breakout. We're pulling back, tried to break out above, pulled back a little bit deeper. And so far in this lunchtime hour, it feels like we're going back and forth. I think the 5-minute chart helps to take out some of that noise where you can see that momentum shift very clearly with the bulls, the bears trying to make some sense of all of this momentum here. Now I have the bias to the bullish side, so that's why I'm getting down a little bit more on the time frames to a 2-minute. And I am happy to enter this position as long as I get an entry better than 178.20. Now I can simply just enter here with whatever this candle is. I can wait for that next momentum switch, which is something I might do. Or you can pick a different time frame and use a different setup of your choosing. Maybe that momentum switch on a 5-minute, and you're okay if that entry is a little bit above that half range mark. If we come into the setup inside of Philip Morris, let me open it. So the setup tells us that with the pullback setup, which triggered early on in the morning, still active, we typically see a 71% win rate. This is over 3 months, a positive P&L and a positive trade expectancy. Here you'll see that we're risking one to make two, and that's a trade I really like, especially on the back of making all-time highs in aftermarket hours. The one downside, only 7 data points. We can take a look here. We get exact entry, exit, stop information, along with what today's range is, $1.25 compared to our average. So all of this is good signs. So I think I'm just going to take an entry here near 178. Now to craft this trade, I'm going to use a trigger with 2 bracket order here. And here's how I would craft this up. So let's put the order at 178.05. And now for our stops, I'm going to adjust our stops to be outside of this bottom opening range here. I'm going to give it a little bit of breathing room, mostly because I'm getting a better entry than even the half range mark. So I'm just going to give that on the flip side. Our first target is what is our original entry breakout level. And our second target, I'm going to leave up here at that half range target mark. And this all starts with this symbol right here. So we see it on our scanner. We see Philip Morris is an active setup for the long side setup. There we just got filled. And we're looking for this setup in which we typically risk one to try and make two. And we got a better entry than even what the actual entry price was. Here it was 178.13. We got the fill at 178.05. Now this first target's at 179.38. And if we were to use that same 179.38 for that second target, that would give us a move close to right here. So that's actually front running the first target even more based off of the actual entry. And I'm going to take a little bit additional off here with the 2 shares. The stop you'll see is outside 177.51, And there I've given it a little bit more room at 177.40 just because I got a better entry than even this 178.13. I got about, what, 8 cents better of an entry. So for my stops, I've given it a little bit more than that 8 cents on the flip side. Almost 11 cents, but I'm okay with that. So that's the trade. I'm now going to pause the video and we'll resume based off of whatever happens. Either we hit the stop, we get taken out, or we hit our target where we had a nice risk to reward on this particular trade setup. We're getting pretty close to T2 now. We've already hit the first target. I've been trailing the stop up as price has been moving up, mostly just to protect our profits as we can as we get close to the target, both with this position and the real full size one. Here now at this point, this trade cannot lose. We have our T2 at the existing level that we had before, and I've now trailed the stop up. This is on the last 3 shares. The original 2 shares already got taken off earlier, and our entire entry stemmed from when we pulled back to this half range level. So at this point now, if price chops and we fall over, we roll over, then we get to protect some profit, and if we shoot up, we get to get a little bit greedier and go for a little bit more. And I think while we're waiting for this, let's start with a quick debrief of this trade. So we took our entry at 178.05, which was right here, a little bit below the half range mark. And there we're now officially out of that position. Our risk on this trade when we first took it for the small 5-share position was 178.05. We gave this a stop outside of that 50 mark. We were risking about 65 cents. So if I pull in a calculator, that's 65 cents, times the 5 shares. So our total risk on this trade was 325. And at this point, we've been able to pull out a little bit more because we hit T2. Here's the final of where Philip Morris ended up. We did go a little bit above where we took off our position, but we did fall short of even that second target. So I don't think we got a terrible exit on that second batch of shares. I hope you found this video helpful for all ORB members in learning how to use the new breakout setup inside of the live scanner to find setups throughout the day. You of course have the original opening range breakout setup, but now you have one additional setup as well, so you have a total of 2 setups, which allows you to find more opportunities throughout the entire day instead of just in the morning time. Take care, everyone. Good luck trading, and I'll see you in our next update.